Hi, I'm here with Spencer South, partner at Lazarus Capital Partners. Spencer, please introduce your company for us and tell us about the types of companies that you invest in.
Sure. Thank you. I appreciate you having me today and the opportunity to talk with you. We are a small three-man private equity shop based in Birmingham, Alabama. We've got three partners, myself and two other guys, and we raised our first fund back in 2003 primarily from friends and family. A tiny bit of money, but it was enough to go buy four different companies. And say that those companies, the strategy in the first fund was focused on distressed and turnaround type situations. We had some success in those, had some liquidity events, and then in 2010, we were able to raise a second fund, predominantly from the same group of limited partners, and some extensions thereof, friends of friends and some family offices, but we're able to raise a larger fund, still a small fund, but larger for us. We actually shifted our strategy somewhat to focus more on what we call relative underperformers as opposed to dead turnarounds or distress type situations. So maybe their company's making 4 or 5%, but we feel they have the ability to make 10%, or maybe they're making 10%. We feel like they have the ability to make 20%. So sort of relative to what we feel like they could be. And so that's what we've been focused on in the second fund.
Do you have an industry focus at all?
Yes. I would say in terms of focus, we're looking at companies doing, say, 5 to 25 million in sales, break even up to 5 in EBITDA. Generally in the niche manufacturer space, the value-add distributor, business-to-business service company type space, basic blocking and tackling type businesses, basic execution type businesses, as opposed to healthcare or software or any of those type sectors where we know that they're good opportunities, but it's just not what we do, and we try to stick to what we do. We're a bunch of Luddites around Lazarus Capital. So
And do you
anyway.
have a regional focus at all?
Yeah, historically we've been in and around the Southeast, and that has been our focus. In December, we bought two different companies, really one platform, but two different companies, one in Cleveland, one in Chicago, and so that was unique for us in terms of geography. But typically we've been in the Southeast.
Great. And now, Spencer, how do you add value to the companies that you work with?
Sure. As I mentioned, I've got two partners, one of which is an accountant by trade, but has been doing turnaround work and working with companies in a consulting capacity, as well as actually running companies for the last almost 25 years. And in that time, he's worked with over 80 different companies. And so he has been involved in a number of different situations, a number of different sectors. He's seen a lot and been through a lot. And so thankfully we have him on our team, and he's able to, we've got him as an asset to install in a situation when it requires it. So it allows us to look at companies that we might not otherwise look at since we have him.
So, Spencer, what sets you apart from other private equity firms?
I would say two things. One, in what I mentioned, having the ability to go into a situation that is distressed or underperforming and be able to affect a turnaround or add value in terms of putting the processes and the systems in place to sort of professionalize a business and kind of take it to the next level. I think that, as opposed to just being a straight financial buyer. And then secondarily, the size companies we will target. I mentioned the range of kind of 0 to 5 in EBITDA. At the end of the day, our sweet spot's sort of in the 1 to 2 or maybe 2.5 in EBITDA. And so at that lower end of the scale, there's not a tremendous amount of committed capital to that size company. And primarily that's a function of it just being, too small to move the needle for most larger private equity groups. Where for our small fund, it's meaningful and it does move the needle. And quite frankly, we like it because we feel one, it's an opportunity for us to get involved in maybe a little bit hairier deal, and we feel like we can grow a business from say 1 to 3 or 1 to 2 in EBITDA easier than which is a double than taking a $5 million EBITDA business and growing it to 10, which is also a double. We feel like it's easier for us to focus on the smaller companies and work with the management team and sort of put in the processes and systems.
And now, what is the biggest challenge that you've faced in business?
I've been running businesses for us. He's actually running in a CEO-like capacity, running 3 different businesses for us right now. And that was not by design.
Spencer, what is the biggest challenge that you've faced in business?
I would say it's really been a capacity issue. The partner that I referenced earlier that runs businesses for us, he's actually running 3 different companies for us right now, and that was not by design. But that's okay. We've got that capacity. I mean, we've got that ability, and he's doing a great job, and we're excited about our prospects for those investments. But that being said, we've got a little bit of a capacity issue with regards to getting involved with investments that need our oversight on a sort of day-to-day type basis. That means we're looking for more deals like we did back in December that I also referenced, deals where we will back a management team. The deal in Chicago and Cleveland, the platform I mentioned, it was a situation where a management team was running the businesses for a group of several passive owners who had owned it for a number of years. They were not interested necessarily in putting money back into the company to grow it, more just continuing to sort of clip along at the same pace, where the management team was very interested in trying to grow it both organically through adding some lines for some existing customers, some smaller add-ons that looked attractive from an acquisition standpoint that they knew were going to be available and wanted to pursue. So anyway, it's a situation where we went in with the management team. Management team had not had any equity, but they got equity in the deal. And so we're all on the same page. We're growing it. In fact, we just completed an acquisition last week, a small little acquisition, but definitely accretive to our platform. And so anyway, it's a situation where it's more of a growth play for us, and we're very involved, just not on in a CEO type capacity on a day-to-day basis. And so that's really how we leverage our time, and that's how we will probably round out the rest of our fund, given our capacity constraints for operational oversight.
Great. And Spencer, I have one last question for you.
Sure.
What is one thing that you can really attribute to your success?
I would say probably a combination of tenacity and patience. Private equity business is a tough business, but we enjoy it, but it's tough, and you've really got to have a long-term time horizon in terms of your investment focus. And so you've got to remind yourself that it's a marathon, not a sprint, and there are a tremendous number of obstacles in getting a company from A to B, or professionalizing a company, putting in the systems and processes and kind of taking it to the next level. And so you've really got to remember that it's a fight every day, but you've got to have that long-term time horizon and the tenacity to sort of get over the obstacles and the staying power, really, both mentally and financially. You've got to have the dry powder for the hiccups in the road, and you've got to have mentally. You just got to be prepared that things always take longer than you think they're going to take, and you got to be able to hang around to see it through. I think to the success we have had, I would attribute most of it just to hanging around.
Sure. Great. If you're interested in learning more and connecting with Spencer, go to fundology.com.